Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, we're back here on the Investor Coaching Show. Paul Winkler. Evan Barnard here hanging out with me. Yeah, there was that article. Let's talk about the S&P 500 held a critical threshold. Here's what history says happens next.
Uh-oh.
Yeah, just whatever. Whatever.
Should we get in or get out, Paul?
It's funny because I hear people, when markets kind of do their little thing, you'd have been hearing about U.S. markets. International markets, it's not, that I'm not. Value, I've been noticing lately, has been holding its own, doing well, actually up. I haven't heard a newscast talking about how it's up. I don't know, Evan, I can't figure it out. Why is it?
You mean international value or small value? U.S. small value?
U.S., the U.S. value. I just haven't been hearing the newscasts. All I hear is Dow, NASDAQ, and S&P 500, and that's what the investment firms always tell us about. But, you haven't heard about those low price-to-book companies. I don't know why. I have to mock them. The investment industry just makes me absolutely crazy nuts because
it goes back to what you said first hour of the industry is very good at giving people what they want, not necessarily what they need or what's good for them. And if they want stuff that they know about and they hear about on TV, that's what they're going to advertise and sell.
Yeah, the value factor's up 3 point as of I had to pull up. I don't even have it to yesterday. I had to pull that up. That'll be interesting to see what that is. I logged out. I love my software. No, I don't. It's like they are so protective. You can't. We don't want you getting back into the software. It's better make sure it's you. Nobody wants to get into my software. It's too boring. So anyway, we'll come back to that. I'll log into that later and pull up the latest data on that because I think it's interesting what's actually been happening recently. So Elon Musk, big pay package.
Yes, sir.
What have you been hearing, Evan?
I'm hearing it's got a lot of zeros on it.
Yeah.
To me, the most
trillion.
Interesting thing about some of that pay package, in addition to the metrics, and I'm not sure what all you're going to cover in terms of what he's got to hit business-wise to get that money. But I thought it was interesting that the sovereign wealth fund manager over in Sweden, I think it is, voted no on the pay package, and that had made news.
Yeah, I had heard one of the bigger investors had actually voted no.
He's a pretty conservative guy anyway. I've actually talked about a couple of articles on him over the years. But he voted no. That was one of the more interesting things that came out of that process. And I think actually Kathy Wood was talking about some of the pay package thing on that same interview.
Well, did you hear about what? So I don't know what the metrics were of what he had to hit.
I think he has to get a market cap of like 8.4 trillion. And one of the performance metrics was 1 million driverless taxis or cab, whatever they call them. And I can't remember what one of the other ones was.
Yeah, I don't remember what it was either. There was...
they were pretty robust. And so here's the other thing. Let's say he doesn't make it, and we have a story in 2 years. He only made $782 billion.
That's exactly what my thought was. What if he doesn't What if he doesn't hit the metric and doesn't get the pay package as a result of it? But what happens? Where does he take this place? Yeah, and that's what this one video was. It was him discussing the Optimus robot, and I thought this was fascinating. He's looking at the robot, and he's doing this whole thing on what this robot is able to do and where it might take us. And what he got into was talking. Oh man, I can't. I don't know where on earth I have that video. Doggone it! I thought I had it right here. I don't. But anyway, what he was talking about is, it was the idea of holding people. We hold people incarcerated in jails all around the country. And what if we had a robot that you assign to this criminal that stops them from doing a crime? And I have no idea what he's talking about. But I was talking about my son, who's in criminal justice major. He was criminal justice major and graduate.
Thought you were going to say he's in jail.
No, he's not in jail. And I said, Alex, this is interesting. And he goes, what are the implications of that? I said, I have no idea.
Yeah.
I just know that this guy is incredibly creative and comes up with things that people just don't think about. But they're talking about having a personal robot in your home, doing things. And they had somebody, I saw something, I don't know what it was. It looked like they had a robot at an outdoor picnic. And the robot was doing the grilling.
I can see that. McDonald's already has that.
Yeah, well, I just thought it was interesting. Hey, can I help you? You have your outdoor party and you got a robot, taking care of everything and cleaning the house and making the beds and at Rosie, you think about the Jetsons.
I was going to say Musk watched a lot of Jetsons growing up.
I think he had to. But his point was how much it would grow the economy, the multiples that it would grow the economy at. And I thought that was fascinating, because if you have. And people worry about, well, is it going to take away jobs? Yeah, it takes away jobs, but it creates new ones. That's always how technology has played a role. But I thought it was interesting what he thought it could do, where it would go in the future. And they showed him on stage dancing with this Optimus robot, and the robot's on one side of the stage, he's on the other side of the stage, and they're dancing, and it's to me mind blowing. And then you've got the driverless cars, and of course we see that all the time. But there are actually some innovations coming in that particular area, and that's moving forward at a pretty decent clip. So, but it's not going to be a car company. That is the point that he was making. It's not just going to be a car company anymore, Tesla.
Right.
It is going to be so much more, and he didn't want to do anything unless he got that pay package. So we'll see where that lands. I have no idea. And I don't think anybody else really does either. I found this article interesting, Evan. It was I'm 53, a single parent, and my boyfriend wants to marry. Am I better off staying single?
Wow.
And I thought that's a financial question. And this person wants to get advice from a financial planner on something like that. I thought, what a weird world that we live in. That was one thing. Another thing that I found.
What was the answer?
Oh, I didn't even want to know what the guy's answer was. I did, I thought probably have a prenup or something like that. And, with a lifetime of hard work and savings comes responsibility. Make sure you safeguard your own retirement and your daughter's future. If you don't already have a prenup agreement, there you go. That's what I figured it probably was. There's 9 community property states: Arizona, Idaho, California, Louisiana. Tennessee isn't one of them. And in these states, assets acquired during marriage are marital property. Those acquired prior are separate property. And, that was one of the pieces of advice, is to do that. Marriage and due diligence, making sure, since should you get married, do your due diligence, have a prenup in this particular case. How many assets do you bring into the marriage? Setting those things up separately. I've seen people actually have trusts that pay that pay an income to whoever they marry until that person passes away. And then those assets pass to their kids. There are all kinds of things you can do in the world of trusts. But they were talking about, the things to do to protect yourself. And I just thought it's kind of sad that, these types of things, these types of conversations take place.
Well, yeah, it's, as you were both in asking the question and then reading through kind of some of those answers, I was talking about the AI conference that I was participating in over the last few days. And Arthur Brooks spoke yesterday.
Oh, I love him.
I do too.
Oh, he's
Justin
one of my
loved his stuff. Yeah.
Yeah.
But he was talking about left brain and right brain and how AI affects happiness and things like that. And he had a couple of lines here that I thought were relevant to that. He said, he said it's a fancy term, hemispheric lateralization. All that it means is you got a left brain and a right brain.
That's right.
And so I may get this wrong. The right brain is for complicated solutions.
Left brain is for that's literal logical language.
Okay, so left brain is complicated solution.
Yeah, so that's
analysis, efficiency, technology,
analyzing things. Yeah,
right brain is for complex questions: love, happiness, meaning.
Yeah.
AI is the ultimate left brain device, an ideal thought partner for complicated tasks, and yet she was asking a complex question. And people are getting in this habit. This was kind of his point of AI is not equipped to answer complex questions. It's good at answering giving complicated solutions to things. And it's like these stories of, kids committing suicide or something, trying to have a relationship with AI.
Yes, AI psychosis.
It's not equipped for that.
Yeah. That's actually what there's a term for that. But and I think so often when you look at this, I just think about this person. I think that's a counselor type of question. Get with a counselor, and not a financial planner.
That's a human relationship. Yeah, absolutely.
Are there some financial planning? A financial planner shouldn't be telling somebody to get married or not. But so often people turn to that particular area or that type of person. But I look at it as there's so much more to it.
Right.
Do you do a prenup agreement? If somebody comes in with so much in assets, there are people that can fool you for a while. I remember, actually, when we studied marriage and family therapy, then when you look at marriages and how you want to spend some time getting to know exactly who that person is, because they can fool you for a while, but you want to slow walk it because you can really get to know somebody. I was reading something about this one person the other day, and she was talking about this person that she had met over the internet, and it said, go watch how they work with their kids. Yeah. If they've got kids, or how do they treat their animals? How do they treat the server at the restaurant? Those types of things.
Yeah.
How do they handle their friends? What are they like? And, then you get a little bit of a better idea of who this person really is. But so many times what people are doing is they're meeting others over the internet or through dating services or through, through some kind of social media and not really getting to know people. But
one of the things Charlie Kirk used to say, talking particularly to young guys, but women would ask questions too, was when they'd ask relationship questions to him on campus.
Yeah.
And he's like, you need to go on a road trip with that person before you get engaged or get married. It's like, go somewhere where you're going to be in a car for 8 hours and you're going to maybe run out of gas, have crappy food. That
was so funny.
That's how you get to know somebody.
Yeah, my wife and I went on it. It was a 16, 17-hour trip.
Yeah.
And literally, we were so broke we had to sleep in the car, on the way to my parents' house. And it was so interesting because we got there and I looked at her and I go, we'll probably make it.
Basically.
Yeah, that is fine. Well, in our situation, we were both broke. So, there was never this question where one person has that much in assets where the other person doesn't. So I guess until you live that, it's hard to make a judgment regarding that. Housing prices, overinflated in many parts of the U.S. Are we in a housing bubble? Was the question being asked. And in some areas around the country, the housing prices are pretty significantly high compared to what they normally are. But a lot of economists are saying, no, we're not in a bubble. I thought that was interesting.
Well, if we have lowering of rates, or frankly, if mortgage rates come down, because just because the government lowers rates doesn't really mean anything directly to the mortgage market. But if mortgage rates come down, what typically will happen is the price of the house will shoot up because people are still looking at oh, well, now I can get a $380,000 house.
Right. And it increases demand.
Yeah.
Yeah, absolutely.
So, yeah, who knows, but I wouldn't bank on any of that stuff. Just if it makes sense now, do it. If it doesn't make sense now, don't do it.
Yeah, I think for sure. Okay, let's do this. Let's take a quick break. Come back right after this, Evan. I know you got a bunch of stuff over there.
A little bit.
Let's roll on it. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. Just talking to Evan, I was like, I'm like a cat on a hot tin roof when I'm talking about stuff like, when to get married, when not to get married, and what to do with the finances and prenup agreements. That's just stuff that doesn't make me, I'm just not comfortable with that kind of stuff.
I just usually, when I get some of those questions, some of them are in jest, and some of them are legit from clients.
Yeah.
And I always smile and I lean back to get to my credenza and I say, let me get my counseling hat out just a minute here. Yeah. And they laugh. Oh, okay. It's like, I ain't touching that.
Well, it is, and I often have to, because I've got the counseling thing going, but I don't like to mix them too much. No. I've got to be real careful about that.
Yeah.
For sure. So it's, and then I do start talking about it on the radio, and I'm really tempted to get into the detail I might but I'm like, Paul, don't do that.
Yeah. Be a good video.
Yeah.
Be a good video.
It would be a good video. I don't know if I'm willing to do that. But anyway, Evan.
Yeah, I got a few things, but one I'll start at, I won't call it anecdotal, but just with some of the recent news up in Louisville. It's always a cautionary tale about stock picking is where I'm starting here with Boeing. And, as you recall, several years ago, there was a person at an event we were at had just scads of Boeing stock. Knew the company, not going to sell it. I'm not going to diversify because this is going to run forever. That was back when Boeing was $430 a share. And then, of course, planes started falling out of the sky, doors blew off of a 737 and so forth. Well, a week and a half ago, Boeing makes an announcement. They finally were starting to claw back up. They got back above 200 a share. And again, this is not a stock picking tale. This is a stock picking warning tale. And then they make an announcement. Okay, we're not going to produce as many 777s as fast as we thought we could.
Yeah.
Stock started to take a hit. And then the engines on that UPS plane in the crash, now all the MD-11s are grounded. That came out either last night or maybe earlier today.
Yeah, I was just looking at the stock price movement.
It's now at 190. It's down like 14% in the last just several days.
Oh,
it's back below 200.
It's brutal. Yeah, it's at 194. Yeah.
And so you just, the point is you can't predict the future. Active managers wouldn't know an engine was going to fall off a UPS plane. I don't care how many times they looked at the balance sheet and the EBITDA and, you don't know what you don't know. So that to me is just always a cautionary tale anytime I hear news on Boeing that the bad hits just keep coming.
I hadn't looked at the price of that stock in forever, and just looking at the roller coaster that thing has been through, and mainly the roller coaster down. I mean, then ups and then comes back down, and then it goes up and then just drops back down again, and brutal.
Yeah.
If you had everything in that, oh my goodness. Yeah.
It was like $20 million of Boeing stock. I mean, it was a big number.
Well, I've had so many stories of people that are really bet the house on single companies like that.
Here we go. Official story from Jason Zweig.
Uh-huh.
And this is actually from yesterday, Wall Street Journal. This small town pension fund has a warning for millions of retirement savers. If you think cashing out of a private fund is easy, just ask a guy who used to manage $750 billion. This is a column about an investment loss of less than $1 million by a piddly little pension fund. Why should you care? Because the travails of the pension plan are a harbinger of the problems millions of individual investors might soon be confronting. And because a man who was formerly one of the most powerful people in the investment world sees what's wrong, but so far hasn't been able to fix it. Robert Auerter is vice mayor of Indian River Shores, Florida. It's a small town, 4,000 people near West Palm Beach. Auerter has been advising the board of trustees at the pension plan for the town's public safety workers and firefighters. The plan has about $21 million in assets, which is peanuts for Auerter, who used to run the bond department at Vanguard. So he was in charge of the bond investing at Vanguard, and now he's retired and he's helping this pension fund in his little town where he lives. So most of it's in stocks and bonds, but roughly 4%, a bit above $800,000, is invested in the U.S. Real Estate Investment Fund, a non-traded portfolio of commercial real estate with more than $8.3 billion in net assets. This is an example of a private or alternative fund that invests not in publicly traded stocks, but in assets that generally don't have market prices.
Which is what everybody's getting fired up about right now.
When
they need to have this in my 401k. I love this. Alternatives. Yeah, baby. We know. Yeah, and I just shake my head and go, ooh, you have no idea what you're asking for.
Right. My favorite line is coming. The advocates of private funds say they can provide superior returns to public markets.
All right, of course.
That's absolutely true. But there's a big difference between can and usually do.
Oh, ouch.
And so he basically goes through this, and they can't, the fund has had zero return over like 4 years. The fees are high. It's illiquid. They can't sell it. And so he kind of goes into the whys and wherefores of a pension fund. Granted, and this is a small one, but his point is, businesses, corporations, endowments, they don't have life expectancy. They don't, they have multiple income sources that the average retiree doesn't necessarily have. They can weather a cyclical storm or some illiquidity because they have all this other cash flow and so forth that the average investor can't. It's the premise is, even if these investments actually did do better, which is not the case.
Definitely not the case. Yeah,
that they're not suitable for an individual that has life events and all these kind of things that you just can't deal with that.
Well, and that's the issue. And the reason this is so pertinent right now is because this is the type of stuff that they're looking at adding to your 401ks.
Right.
These are the type of investments they're talking about adding to 401ks near you. And this is not bad performance because this person was stupid. This person managed money for a huge mutual fund company. And so often people think, oh, this company walks on water. And I'm like, no, there are a lot of problems with active management. And a lot of the funds that they're dealing with here, you're dealing with market segments, and they love it. They love the liquidity that's coming their way. They love the idea that there's more money that they're going to have access to. That will only make the problem worse. And the reason I say that is because what drives returns? What drives returns is if I have, let's say, some risk, and there's more risk in one asset class versus another, then you could have a higher expected return in that. What's another thing that can drive returns? Access to capital. If you have people that are throwing money at an asset class, think in the past couple of years of AI, think back in the late 90s, people throwing money at technology companies. All of a sudden, their cost to use your money is going to come down, which that means that you have lower returns going forward in the future when there's more money flowing toward you. You don't have to pay as much. I mean, so let's say that everybody and their brother wanted to loan you money to get a mortgage. Everybody was just falling over. They wanted to give you money to buy a house and they wanted to give you mortgage money. Would you have to pay much to use that money? No. If everybody wants to give you money, they're going to all be competing with each other. And how do they compete? Based on price. What's price? Interest rates. What's price when it comes to investing in stock markets or in bond markets or in real estate or any of those types of things? The earnings, the interest, or the rent in the case of real estate that is going to come their way. And what happens to those things when there's a lot of cash supply and not as much demand? Then all of a sudden you got those rates go way down, the returns go way down, or they could go backwards. And that is exactly what happened with the tech bubble. That is exactly what happened with real estate. You look back at 2006, 2007, that whole mess that happened at that point in time. In the 1980s, that was a whole different thing.
Yeah.
Tax law changes. There can be all kinds of things that happen.
Well, and the Asian tigers were going to take over everything.
Oh, 97? When you had the big emerging markets issues. And by the way, emerging markets actually one of the areas that's done a little bit better recently, value.
Yeah.
I was looking back at the numbers on that. But interesting. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.